Micron stock investors recently got a massive warning from Wall Street. And on today's episode, what I want to do is take a closer look if this warning is an overreaction or if there really is massive risk for this memory giant. Let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so right now we can see from its overall month high, the stock is down roughly 10%. And one of the main reasons is we did see a downgrade of a memory giant by Goldman Sachs. Now, the downgrade wasn't directly for Micron, but it is towards SK Hynix. And SK Hynix right now is the leader when it comes to HBM, which is high bandwidth memory, a memory that is used in AI accelerators. Now, on July 17th, Goldman Sachs downgraded memory giant SK Hynix, which sent tremors through the semiconductor industry, casting a shadow of doubt in US rival Micron technology. While not directly downgrading Micron individually, it felt the immediate negative impact on the sector-wide anxiety. So there were three main points that Goldman Sachs wanted to make. The first is Goldman Sachs projects that the robust pricing for HBM could face significant headwinds. Increased supply from major competitors is expected to lead to the first potential price declines in 2026. One of those potential major competitors is actually Samsung, someone who has been kind of dormant in the HBM space right now, at least in nice volume. So the market is perceiving that as, yes, that's bad for SK Hynix, but another added competitor will be bad for Micron. And because as HBM market matures, analysts predict that the power is shifting. Right now, suppliers like Micron and SK Hynix have the pricing power because there's not a lot of memory to go around. But if you start to add more and more competitors, major AI customers like your NVDA, your AMD, and your ASIC solutions who buy this HBM are going to be the ones with the power because they can say, look, I can go, if you don't give me a better pricing, I'll just go to your competitors or your other competitor instead. And because of this decline and because of this shift in pricing power, Goldman Sachs believes that SK Hynix will have less profitabilities. Goldman's 2026 profits on SK Hynix fall 19% below the consensus. So again, most of it was on SK Hynix, the leader of this space, but it is trickling down on Micron. Like I mentioned, they are a direct competitor. They have the share market dynamics, and just the investor sentiment is kind of punishing the memory market as a whole. And I want to say there's a few reasons why maybe it shouldn't be thought like that, because Micron is coming from a smaller place here, and they could also be one of those competitors out there. I think right now the major threat, as we're going to see in a bit, is mainly to SK Hynix because it holds the majority of the share. And if anybody's going to be losing market share, it's going to be them. And I think Micron and if potentially Samsung are going to be the ones eating up that share from them instead. Now, there is some counter narrative to this bearish sentiment and about bullish outlook. Most recently, Mizuho Securities viewed the recent stock dip as a buying opportunity. They reiterated an outperform rating for Micron based on strong fundamentals. They believe strong HBM positioning, HBM4, which is the next generation of HBM, is doing really well in early testing, indicating a future competitive edge. The second thing is just the long term of AI demand. If the overall AI market continues to grow, there is going to continue to be this supply and demand imbalance, which is going to be still favorable for the overall memory players. The final thing is the favorable product mix. There's more than HBM that Micron provides that can also benefit in this overall AI era. Now, the road ahead, the market is obviously currently at a crossroad. There's some players that believe the HBM space is on the negative side. Others believe there's a lot of growth opportunities that you can outthink or outweigh those risks. The upcoming months and maybe the upcoming year will finally reveal the answer. I do have some thoughts, but if you guys are enjoying the episode, if you believe you got a lot of insight in the past 4 or 5 minutes, make sure to hit the thumbs up and the subscribe button. This is the best place you're going to find any semiconductor news for free. Check out my free newsletter. I'm trying to hit 75,000 subs by the end of the year. I have some amazing offers on the link below for platforms that I personally use. Anything I'm promoting, I use on my daily basis. So make sure to check it out. And I would really appreciate it as it does support the channel. Now, I kind of wanted to talk a little bit more. So there's some more bearish points behind that might have been missed with the Goldman Sachs and just the overall industry. So right now, the first thing is Samsung Electronics, like I mentioned, is one of the memory players that has been lacking in this space. So a ramp up of production here is going to create more competition for SK Hynix and for Micron. And there are a lot of emerging players like China, which aim to mass produce HBM3 by 2026. And throughout this episode, at the end of the episode, I'm going to share my thoughts, but this is going to be crucial. If the market stops where we're at right now and we only need things like HBM3, this market will re-enter a commodity phase, and that's obviously bad. But what we're seeing right now is we don't want just HBM3. We want the next levels, HBM4, HBM5, and the things go on and on. So as long as innovation continues to demand, it is demanded from these memory players, then I believe as long as you're an innovator, you're gonna not be part of the commodity market. But things like HBM3, as HBM4 comes out, will become a commodity, and hopefully that makes sense. Now, I also want to kind of showcase the overall landscape of the HBM market. So for Hopper, the H100 from NVIDIA, the confirmed suppliers were mainly SK Hynix, and that's why SK Hynix has received a huge majority of the market share, because they've been there from this AI era. For the H200, it was some Micron, but still mainly SK Hynix. For the Blackwell, is Micron and SK Hynix, and for the Blackwell Ultra, which is the GB300, is again SK Hynix and Micron. Now, Samsung is still trying to work with NVIDIA, but NVIDIA has kind of this very hard qualification that Samsung keeps sailing. Regardless, AMD did choose Samsung for the Instinct MI350, and for the SK and for the Rubin. And all of these have been HBM3 or HBM3E. The first HBM product is going to be the NVIDIA Rubin, and the only one that I believe has sent testing samples is SK Hynix confirmation to NVIDIA. Micron has talked about sending it, but we don't know if they've sent it to NVIDIA. But SK Hynix and Micron have both shipped out. So you can see that SK Hynix is the leader for various reasons. Micron is definitely second in place, getting some good partnerships. Samsung is lagging here a little bit. Now, potentially the MI350 and 355X will do good, so that can obviously be a great beat for Samsung. The other thing is AMD choosing Samsung instead of SK Hynix because they need Samsung, or Samsung has a better product, or it's just because SK Hynix has given most of their products to NVIDIA instead of AMD. So, right, a company needs to say, I need you to be able to guarantee this amount of product for me. And if you can't do that, then they might choose another competitor, even if it might be a weaker product. So, like I mentioned, NVIDIA is right now the dominance in the AI accelerator market, and they sell the most AI chips. So in theory, gaining NVIDIA as a customer is the single most valuable prize in the market right now. And again, we see that with the SK Hynix and NVIDIA, why it is the market leader. NVIDIA's qualification process is rigorous and lengthy, acting as a formidable barrier to entry and a powerful validation of a supplier's technology capabilities. If I know NVIDIA is using SK Hynix HBM3, it's going to be easier for me as some random company to say, look, if the best of the best is using it, I don't need to go through this crazy process of testing you out. I'm most likely going to do it. It's kind of like that great promotion. However, despite the deep and long-standing relationship with SK Hynix, no company ever wants to be reliant on one player. We see it all over the industry. So that's why NVIDIA continues to pursue this multi-sourcing technology. This is why they use Micron and why they're still testing Samsung, even though it's still failing, because they want to go to the table and say, look, SK Hynix, thank you for your time, but you got to do better in pricing. Your margins are crazy right now. And you're the most costly part of making an AI chips. That's actually, for those that are not familiar, the most expensive part of making an AI chip right now is actually the HBM side. It's not the wafer, it's not TSMC, it is the HBM side. Now, the great thing here, so we kind of saw one of the fears for Micron was that there's going to be an oversupply of more products. Now that I don't see that, right? Because one, NVIDIA continues to sell more and more chips, but it's not just NVIDIA anymore, right? AMD is seeing a nice high volume production of the MI350, and the MI400 is expected to grow still. And it's also not just NVIDIA and AMD. You continue to hear all these ASIC suppliers. So I think the market is just growing so big that there's still going to be an over demand issue and not enough supply. Now, the other thing is the manufacturing complexity of HBM is a key bottleneck, right? Producing 1 GB of HBM consumes approximately 3 times the silicon wafer capacity as producing 1 GB of standard DDR5 DRAM. This means that every wafer allocated to the high margin of HBM market is a wafer that cannot be used for commodity memory, creating a tight supply environment across the entire DRAM sector and ensuring HBM remains a premium price product. So it's not only about HBM no more, but it's also about the consumer space. And the consumer space still hasn't turned around. What happens when the consumer market turns around and you need more wafers for consumer DRAM, but you also see the more demand for AI accelerators? Now, some key inflection points to monitor is obviously any qualifications that Samsung passes. This is going to be an increase of competition, especially in NVIDIA. Also, HBM4 sample performance. Who is doing the best here? Manufacturing yields is crucial, right? And this is another thing to kind of think about. And finally, the major custom ASIC supplier announcement if we continue to see more and more AI demand. So let me explain what I think. So I think right now it's all about innovation. The company that keeps innovating will win if the market needs the most advanced HBM. And this is the fun part about investing in the technology industry, especially the AI market. There's no guarantee of what road wins. You have to pick a road and you have to see if that's what the case is, right? So I do believe HBM3 and HBM3E will be become more of a commodity as we progress, especially when HBM4 comes out. So yes, there will be pricing wars for HBM3 with more competitors. But if NVIDIA and other AI accelerators need the most advanced HBM, that HBM will be priced accordingly. So HBM4, if you need it, and that's only a few people can do, HBM4 is going to continue to have high margins. HBM3 will become the commodity product. And the other thing is not only about commodity products or kind of a pricing war. In theory, as you get better at manufacturing something, you get better yields. So even if you lower the price of something, if you sell it at a lower price, if you can make more of it and if you have better yields, you can still be very profitable in that business, and your earnings per share can still grow, or even can grow even if sales decrease or the prices of your product decrease, because you have better margins. So that's something to consider, right? The yield rate and who's doing it better. Now, I also believe that demand will continue to increase as AI workloads continue to grow. So I think this AI market is very, very bullish for Micron and SK Hynix. I also, like I mentioned, believe Micron is a small player. We saw from that list that Micron right now is only being used by selected amount of usage and not a big majority within that industry. So Micron, even though SK Hynix can lose in market share, Micron can still gain from the demise of SK Hynix and how big companies want to lose their dependency of one player. As long as you keep innovating, I think Micron still has the time. So I think a lot of these fears are unwarranted, especially for 2026, where we still see the huge need for HBM4 and we still have a massive, massive demand for AI accelerators. Eventually, there might be a shift. I just don't think 2025 or 2026 will be that year. Now, I want to talk about what I believe is the biggest risk for Micron. First is, will it continue to innovate at rapid levels? It did really good with HBM3 and 8 high, 12 high stacks, and all these different high stacks. And it seems to be moving very well with HBM4. But if there's a slip up in that innovation, if it makes a mistake, that can create a negative sentiment for the stock, and that would push it back to a commodity market where things can go pretty south. So that's the big risk. Hopefully, no issues with its innovation process. The second big risk is, will the market continue to need the best of the best memory? If the answer is yes, then that best of the best memory will continue to be priced accordingly. If the answer is no, we enter a commodity zone again. And that's kind of the biggest red flags, in my opinion, for Micron. At least for number two, we know HBM4 is really needed. So at least for 2026 and 2025, I don't think that fear is truly there. The biggest risk is, will it be able to innovate, and will it be able to keep up with these qualification tests for HBM4? Because just because you passed HBM3, HBM4 is a whole different monster. And if the HBM4 Rubin is truly insane, then you need to make sure you pass that qualification test to be able to be that supplier. And HBM4 for the Rubin, even though Rubin comes out in the late of 2026 for HBM4, they most likely will start selling or sending those chips early into 2026 or mid 2026. So there might be some pressure in HBM3E, but HBM4 is where it's going to continue to matter. So again, I think a lot of this is a lot of risk that could happen, but nothing that I'm seeing as an immediate threat unless something changes drastically. So I hope I provided some information. And again, it's sucky, but in this technology and innovation in the AI market, no one can give you a definite answer. The best thing, especially someone like me that can give you, is what are the risks and the growth opportunities? What road is the market going to take? Unfortunately, is something we just have to wait over time and see. But right now, at least the evidence that we have is HBM4 is going to be crucial, and the most advanced HBM technology is going to continue to be crucial from 2026, maybe even 2027. That's what we know for certain right now. And if I was a Micron shareholder, I would say these downgrades wouldn't be a reason for me to sell. It really wouldn't. But buying this stock, I would definitely want to think about these risks, and is it something that I would like? I would be okay holding for. I still believe there's bullish takes behind Micron, but personally, I'd just rather invest in a different way. I've talked about the bullish sentiments for Micron in the past. Again, I've even talked about it here. Just the capacity versus demand because of the bottleneck, and how you need to do a trade-off ratio, and you're using a lot more wafers for HBM, creates this great supply and demand unbalance. And I think that unbalance will continue for some time. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.